Dividend stock picks are always a highly requested topic on this channel, and it so happens that the last time we spoke about dividend stocks was over a month ago. So honestly, what am I doing here? Let's dive into some really awesome stock picks that you could add to your portfolio in March of 2020. Hey, what's going on, savers and investors? I hope you're all having an awesome day and that you're not getting too caught up and emotional over the stock market taking a little tumble here over the past couple of days. Honestly, guys, it is completely normal for the stock market to go through some ups and downs on a periodic basis, and over the past couple of months we've been extremely fortunate here, having the prices just go up and up and up and trending green. So once again, completely normal to have some small corrections throughout the course of your investing, and if anything, this is a really opportune time to get into some positions while the prices are low, so that over the next couple of months, when the prices inevitably come back up to par, you're able to have some healthy gains. If you're new to the channel, then welcome. My name's Griffin, and in today's video we're going to be diving into a topic that honestly is long overdue. Over the past couple of videos we were speaking about taxes and investing, for example, if you're in your 40s or 50s, and I do realize that a dividend stock pick video was really necessary here. So today we're going to be going over 3 dividend stocks that I'm currently looking at and looking to add to my portfolio in March of 2020, and I think you guys are going to agree with some of these picks. And by the way, if you're an investor who's actively looking to add some more dividend stocks, ETFs, and real estate investment trusts to your overall portfolio for some dividend income and share appreciation, then make sure to check out the other videos on my channel where we've gone over a bunch of really great securities that you can add to your portfolio. I've personally had a bunch of people reach out to me specifically mentioning some of these securities that have done super well for their portfolio. So if you're interested in checking out those videos after watching this one, there's links down in the description, or there's a card right here for easy access. And also, if you're interested in receiving your very own copy of a stock market portfolio template that I made with Google Finance, and there's a link down in the description. With this template, you can basically change everything to your liking, and it automatically updates with the different ticker symbols and Google Finance functions. So once again, link down in the description for that template. All right, so with all that said, let's not waste any more time and let's go ahead and dive straight into these 3 dividend stock picks for today's video. And 2 of these stock picks are actually double listed, meaning that in this case they're listed on both the Toronto Stock Exchange and the New York Stock Exchange. So whether you're Canadian or American, you can purchase these stocks in your own currency. The first dividend stock that we're going to be looking at on today's list operates in the energy sector and has been a dividend aristocrat now for 18 years, meaning that it's been consistently raising its dividend payment for a total of 18 consecutive years. The company I'm speaking about is Suncor Energy, also known under the ticker symbol SU on both the Toronto Stock Exchange and the New York Stock Exchange. So this was one of the stocks I was speaking about here that is dual listed. Suncor Energy actually happens to be one of the largest energy production companies in the world, in the top 20 at least, and operates in a variety of different energy fields, such as, for example, the oil sands in Canada, as well as oil refinement, and then also offshore oil and gas drilling in the North Sea. In terms of the Canadian market, Suncor Energy is the #1 producer of oil in the country, and the company estimates that it has a total capacity of 461 million barrels of oil production each and every day, which is just crazy. And even more than that, the company has a reserve of over 7.5 billion barrels of oil, which is honestly hard to even wrap your head around that number. That must be a huge warehouse. And if you're wondering if you've ever done business with Suncor Energy, well, chances are that you have, because they have over 1,700 retail locations for their oil products, including brands such as Petro-Canada, Shell, and Phillips 66. Before taking a look at Suncor's quote and financials, I'd also like to mention the fact that even though this company is heavily invested in oil and natural gas production as its bread and butter, the company has also put a focus recently on renewable energies since 2002, with the overall company goal of reducing its total emissions by 30% by the year 2030, which is awesome. Suncor currently owns 8 wind farms capable of generating 395 megawatts of energy per year, which is enough to power about 200,000 homes for 1 year, which is definitely a good start. I personally believe that a focus on renewable energies is really going to be a driving force for energy companies' sustainability and overall growth over the next 20, 30 years and so on, especially as more consumers and governments are leaning towards more sustainable and renewable energy sources. Suncor currently trades for right around $38, $39 on the Toronto Stock Exchange. It took a little bit of a tumble over the past couple of days, right around $2, and this puts it right around the midway range on the 52-week spread for this stock. If we take a look at Suncor's 5-year chart, it's quite evident that over those past 5 years, the company's been trending relatively sideways in terms of share price, with a slight gradual incline and a pullback since 2018 when it reached a high of $55 per share. But as we're about to see with this company's financials and operations, I personally believe that we could probably see an increase here of about 10-15% over the coming year, but that's just my guess with this share price. The current price to earnings ratio, or PE ratio for short, for Suncor is 21.5, which in the energy sector in Canada is a little bit on the higher side, but nothing too crazy here. And nonetheless, the EPS is 1.82 and the dividend yield is right around a nice 4.7%, which translates into a cash distribution on a quarterly basis of 42 cents per share. And finally, the dividend payout ratio for Suncor Energy is right around 58%, meaning that this company has ample amounts of room to grow their dividend over the coming years if they want, and also has substantial amounts of capital in order to fund more business operations and expand the company. Taking a quick look now at the company's financials, Suncor Energy has seen steady increasing revenues over the past 5 years, with net income taking a little bit of a hit in 2019, but this is due to higher than average development and exploration costs, which could be beneficial for the company's overall growth and expansion in the coming years anyways. If you're on the lookout for a dividend energy stock that has a nice dividend yield and potential upside for growth, then Suncor Energy is definitely a stock that you should consider. And if you're interested in learning more about the top energy dividend stocks in Canada, then make sure to check out the blog article linked down below, where I go over an extensive list of some of Canada's top dividend energy stocks for 2020. Moving on now to the second dividend stock on today's list, we're now moving into the telecommunications sector, which, if you remember from my last video, we spoke about Cogeco Communications, which is also in the telecommunications sector. However, some people had mentioned that the dividend yield of sub 2% was just not sufficient enough for them in their dividend portfolio. So today we're more than doubling that dividend yield here with Telus Communications, also known under the ticker symbol T on both the Toronto Stock Exchange, and it is also dual listed on the New York Stock Exchange. It's pretty safe to assume that if you're Canadian, you're probably already aware of Telus, as it's one of Canada's main telecommunications providers, and it offers a wide variety of products ranging from internet, cell phone, and now even fiber optics television in some areas. The company has more than 9 million customers in Canada alone, meaning that it has over 30% of the overall telecommunications market share, which is honestly pretty impressive. Also important to know with Telus is that, like pretty much all big telecommunications companies, Telus has their very own discount subsidiary for telephone services, and in the case of Telus, it is Koodo, which you probably all know, and I personally have done business with Koodo in the past. It was an okay experience, and actually, as I was doing research for this video, I happened to stumble across those old Koodo ads, which had that Mexican wrestler in it. They were so funny. Do you guys remember those ads? Let me know down in the description if you remember those ads. All right, so currently Telus trades for right around $51 on the Toronto Stock Exchange, and this puts it right at the halfway mark for the 52-week spread for this stock. If we take a look at the 5-year chart for Telus, we can see a pretty steady and healthy increase in share value over those past 5 years. And in my opinion, with the growing customer base as well as revenues of this company and overall just great operations, I wouldn't be surprised if we continue seeing the share price grow over the next couple of years, reaching even the $60 range over the next year or so. But as with all stocks, time will tell for Telus. Telus currently has a price to earnings ratio of right around 17.7 with an earnings per share of 2.90, so pretty standard for the telecommunications industry in Canada. And as mentioned earlier, the dividend yield for Telus Corporation is quite nice at right around 4.5%, so really healthy as a nice dividend stock to add to your portfolio. And this 4.5% dividend yield actually translates into a 58.25 cash distribution per share on a quarterly basis. And fun fact, Telus is actually also a dividend aristocrat with now 17 years of consistent growth in dividend distributions. And finally, Telus is a large and established telecommunications company in Canada, but nonetheless, it is still seeing revenue growth year over year with net income following the same trajectory. If you're looking for a solid telecommunications dividend aristocrat to add to your overall dividend portfolio in 2020 for overall share appreciation and dividend growth over time, then Telus Corporation is definitely a stock that you should add to your watch list. And now finally, the third and last dividend stock on today's list, we're going to be diving back into an industry that is notorious for those high yields and consistent dividend payouts. It is the energy industry here with Keyera Corp, also known under the ticker symbol KEY on the Toronto Stock Exchange. This stock currently trades for right around $34 per share at the time of filming this video, putting it at right around the 3/4 range of the 52-week spread. And personally, once again, I believe that over the coming years, we're going to see the share price of this stock continue rising somewhat gradually, especially due to the company's financials and operations, as we're about to dive into. If you've never heard of Keyera Corp before, well, honestly, I don't blame you. This is a company that deals mostly in Western Canada and focuses on gathering and transformation of natural gas products, and also deals with the transportation, storage, and marketing of these natural gas products throughout North America. This is by no means a flashy tech company like a Shopify, for example, but is absolutely a candidate for dividend income over the coming years, as well as potential for share growth over the coming years, which is definitely a plus for a dividend stock portfolio. If we take a look at the price to earnings ratio of Keyera, it is currently sitting right around 13.2 with an earnings per share of 2.69 and a staggering dividend yield of 5.4%, which translates into a cash distribution of 16 cents per share on a monthly basis. Also important to note, Keyera has been a dividend aristocrat for the past 10 years, so great to see as a dividend investor. If we quickly take a look at the company's financials, Keyera has been posting revenue growth since 2015 with net income following the same trend, and there's also been a rapidly increasing amount of assets in this company, leaving the company now with $6.7 billion in assets as of 2019. And finally, if we take a look at Keyera's 5-year chart, well, over the past 5 years, the share price has been relatively trending downwards with somewhat of a pullback since early 2019. And with the company's strong financials, as we just saw, and their operations growing, I personally think that we could probably see this share price increase to right around the $40 range over the next coming year or so. So this is definitely an energy stock that I would keep on my radar if I was you. So with all that said, what do you guys in the investor community think of these 3 dividend stock picks? I'd love to know down in the description. And what stocks are you currently looking at on your radar or have purchased and added to your portfolio in the past couple of weeks or month? I'd love to know down in the description. And by the way, if you'd like to learn more about dividend aristocrats, make sure to check out the video right here. And if you'd like to learn more about how you could create an overall dividend portfolio that is extremely simple, then check out the video right here. So on that note, thanks a lot for watching today's video. As always, make sure to give it a like and subscribe to the channel. I try to post 1 to 2 times per week here about different financial topics. So if that interests you, subscribe to the channel. And on that note, I'll see you in the next video.